Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to another episode of Forecast Update Live, a new video series from EverAg Insights, where each month we gather to discuss our dairy market forecast. I'm your host, John Spainauer. We're joined today by Erica Medke and Phil Plord. Our regularly scheduled correspondent, Matt Gould, is on assignment this week. To get us started, let's take a look at the markets. Phil, where are we at this month?
We've made some adjustments this month, John, but nothing really major. We've taken the Class 3 numbers down some over the nearby, mostly reflecting cheese market weakness that's come a little harder and faster than we anticipated. And on the Class 4 side, we've reduced our expectations a little bit for butter and powder, mostly down the road. When you look at the next 12 months, which would be May 2023 through April 2024, our Class 3 forecast is at 1763 per hundredweight. That's down 44 cents from those same months last month. And when you look at Class 4, we're now at 1917 per hundredweight. That's going to be down 48 cents from last month's call.
Thanks, Phil. For our next segment, we want to shift over to Erica Medke, who for the last 2 months has had to take the bullish side of the argument. This month, she's going to take the bearish side of the argument. Erica, what's out there that we should be looking for that tends to lean towards the bearish side?
Well, thanks for having me back, John. Really appreciate it. And just wanted to give a shout out to everybody who was at ADPI. It was great to see you because all of you were in the bear camp with me. So it does seem a little bit easy to talk the bear this month because everybody's been on that side of the boat. I would say a big driver, as always, is milk production. In the globe, we've got generally good numbers. Within European space is probably the biggest driver. And a shout out to you, John, with your latest GDT podcast. You really dove into a lot of what we talked about in Europe there, seeing really strong growth out of Germany. That's the number one milk producer. The Netherlands up about 4% on their February numbers, seeing growth in other areas of Europe. At the same time, demand is weakening. So taking a look at some of the inflation numbers that consumers are facing, if we think it's bad here in the States, it's almost twice as bad in Europe. So I think the general sense is not only is there more milk in Europe, there's more surplus milk. There's more milk that has to go find a home. And that is still coming into the international markets, that is competing with U.S. product. The other thing from a bearish perspective, and I would say it's not so much today as it is in the future. So if we, the United States, were fighting against the Europeans in those international markets, we hear that people are getting spot deals done today. The challenge becomes our futures curve isn't giving people the ability to compete against Europe in the future. So we're going to be in this fight to try to move product. We'll be able to move it today, but not be able to solve our problem later down the road, which means that we're going to have to keep the spot prices lower to be able to compete. So it's really a matter of where is that convergence going to happen between futures and spot. My take would be that futures needs to come down to where spot is, and we're going to hang out at these lower levels for longer.
Fantastic, Erica. Thanks for your insight. Phil, Matt is on assignment this week, but we've given you the challenge of taking the bull side of the argument. Where do you sit out here today?
Good thing I'm an introvert, kind of lonely over here in Bullville. Well, I think we need to remember a couple of things. I think, first of all, low prices cure low prices. And even though there is the tension, as Erica points out, around nearby pricing versus deferred pricing, when we see barrel cheddar get, in that 150 and lower area, I think we can move some product on a spot basis. And that does help keep things cleaned up and perhaps resets the cycle for a little higher anyway. And I think that we've seen retailers with appetites to promote cheese and butter in the grocery store. Low prices, should spur some of that demand. And ultimately, we're going to see less milk production in the U.S. and eventually elsewhere in the world because dairy farmers can't really make a go of it with milk prices in the $17, even $18 area. So over the medium to longer term, I think we see the erosion in price both sparking a little bit of demand and discouraging supply. And those would be the best bullish arguments today. Maybe one other. I think the fact that just about everybody seems bearish, oftentimes is a reason to be bullish. That everybody's on one side of the equation, and all of a sudden something happens, and whoa, we're higher, and people are scrambling.
We've certainly seen that play out before. Thanks, Phil. Great to have you take that side of the camp. For our next segment, we wanted to shift to what we call our favorite look. Phil, you've put together just an incredible chart here, and I think it's just really neat to be able to share this. We haven't taken a look at something like this here in a while, so I think it's just an important factor, and it's one that I think gets overlooked quite a bit. But in general, the chart you and your team have put together at Ever Ag Insights is essentially showing that not only is milk production up, but it's also important to point out that the average fat test in the US continues to grow. So putting together more milk and more fat, we've got a lot more fat that needs to find a home. Anything you can add to the discussion?
It's pretty remarkable how we've been telling dairy farmers for years that fat is valuable. Never more so really than last year when butter went to way over $3 a pound. And so what have dairy producers done? They've made more fat. Some of that's via feeding, some of that's via genetics, some of it's just from a wholesale shift to more Jersey cows and fewer Holstein cows. And farmers are pretty good at following the money and the economic forces at work. I think what's interesting to watch is, how much impact does it have on the cream market, day to day. We saw a big jump last year as well, and cream was still pretty tight at times. So a lot of the fat does actually go into cheese plants, and it just doesn't become a load of cream somewhere. But on the other hand, we've created, several hundred, if not a couple thousand extra loads of cream potential, if you will, with the rise in components and milk production in the first quarter. And at some point that weighs on cream multiples and butter price potential.
It seems minuscule when you look at it on a chart, but in reality, it really does add up to a lot more fat.
Yeah, 0.04% is a big number when you have 9 million cows and billions of pounds of milk.
Just incredible. Phil, thanks for this chart. I think it's something that we want to keep an eye on and could have potential implications down the road. That'll do it for this month's episode of Forecast Update Live. Thank you to all of our panelists. Thank you to everyone on the EverAg Insights team for their work and the forecast. And thank you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out via email at insights@ever.ag. If you like this video, be sure to subscribe on the YouTube channel. Give a thumbs up and share with a friend. We'll see you next month for another edition of Forecast Update Live.